All right, so can everyone hear me fine? Am I cutting off or is everyone good? Rick, you can be my guy who tells me, right?
Yeah, you're good.
All right. Um, all right, so today we're going to be going over how I determine my daily bias. And we're also going to be going over how do I take confirmation setups. And before I get started, does everyone? So for you guys who have who was trading with you, right? Let me just do this real quick. For everyone that has TradingView, does everyone know how to use this long and short position button? Basically, what? Okay, this is. All right, I'm just lagged a little bit. Hopefully this is fine. All right, so if you don't already, okay, so after this class, I know some of you guys are gonna be like, okay, was this a good long? Okay, but sometimes you guys post charts in the trading chat, and I don't know what long you're talking about. Start getting used to using these, please, so I can tell what kind of setup you're talking about. So basically what I do, like let's say I want to short this order block right here, right? And my target's down here. Okay, if this completes in hindsight, in order to show this setup, okay, all you're gonna do is this middle line is your entry. You put it at the order block right here. Your stop loss, you put wherever your stop loss is, and then put your take profit, whatever take profit is. Okay, and this way I can kind of see your entry. And I can kind of see if you're asking me a question about a setup, I can kind of see where you're entering, okay? So, again, it's the same thing on the long setup. This play should work. My target is this, but this is obviously my final target. Okay, and you can see we hit bias of liquidity, right? So this is why this is working. So anyways, please understand how to do this, because if you're asking me about a setup and you're not using these, then I don't know what you're going to be kind of talking about most of the time. So get in the habit of using these, please. Just makes it easier for me, especially to answer questions. All right, so today we're going to be going over daily bias, and I'm going to use euro. I'm going to use the euro, and I'm going to use ES, okay? And I can use NQ as well. It doesn't matter. So basically what I do to determine bias is whenever I'm kind of looking at the daily, okay, I always look for three things on the daily: fair value gaps, volume imbalances, and order blocks. Okay, and if you're not writing these in your notes, please write these in your notes. So again, I look for FEGs, volume imbalances, and order blocks. Okay, and the reason I look for these is because they're always, so the daily chart is always going to react to one of these. It's always going to be going to one of these, or it's always going to be using one of these in some sort of way, whether the drawn liquidity or whether we're rejecting or bouncing off them. Okay, also breaker blocks as well. Four breaker blocks. Okay, so if I draw from this leg, I'm just going to draw everything I see right now. Okay, so right here I see fair value gap, and it's a volume balance. I see volume balance here, another volume balance, fair value gap here, another fair. This is actually a balanced price range. This is another fair value gap. This is a order block. Okay, this order block is the green candle for the down move. Okay, this is actually also an order block as well. Okay. So just alone, these are everything I mark, okay? And what I do, okay, if we go back to kind of a little bit back in time, right? If I go to replay mode, whenever we create a fair value gap like this, okay, how often do you see us go? How often do you see us just keep going down without retracing the fair value gap? Okay, on the 1 minute, it happens occasionally. Okay, where we just get a dump and we just keep dumping, we never retrace. But on the daily chart, I feel like this is very unlikely. Daily chart is always going to be more balanced, meaning there's always going to be more retracements and stuff in the daily. It's just going to be a little more textbook, okay, because it's a daily chart. Everyone uses it. And whenever I see fair value gaps even create or volume bounces, I'm always marking them. So in this time, okay, this is where I'm marking this fair value gap. I'm also marking this volume balance. And I'm also marking this volume balance, okay? And what I'm kind of looking for here is I'm not guessing if we're going to retrace back up here. Okay, I am not guessing at all if we're going to trace back up here, okay? And I also mark like old obvious lows inside, like see how this low was made inside this fair value gap here? This is an important low to me, and this is also an important low to me, okay? And when we get to this point, okay, as long as we don't hit this low, I'm kind of like, I have this fair value gap drawn because, again, you're not going to see the daily chart go straight down and knife down, okay? The only time it really did that was in COVID. The only time it did that was during COVID, right? So the daily chart, most of the time, it will retrace or will rebalance to these fair value gaps. Okay, so I always keep them on my chart. If they don't, it's whatever. Okay, you can't do anything about it. But whenever I see a fair value gap created in the daily, I'm usually expecting a few days later or a week later for this to be rebalanced. Okay, but so let's say I'm right here, right? And the daily candle opens here. If we go to like the 5 minute. Okay, we know the daily fair value gap is up here, okay? Which this is the high to get in this fair value gap. And the volume's kind of gonna be bad because this was a while ago. Okay, but knowing we have this daily fair value gap up here, can someone tell me the answer, okay? Are we gonna blindly long to this fair value gap, kind of guessing we're gonna hit it? Or or is there something else we're gonna do? If there is something else, can someone tell me what it is? I'll let Rick take the answer for this one, since he's really the only one talking. But
yeah, I guess.
Yes. So you're saying. So my question was, are we just gonna blindly long, expecting this fair value gap to hit from right here?
The other thing is,
I don't know if he knows he's unmuted. Hey, Steezy, you're unmuted, homie.
Effort to help Dad get ready so that
You guys should know by now that every question Dodgy asks is like the opposite.
Right? Okay. Someone answer the question. Are we gonna blindly long? Are we gonna
blindly long?
No, exactly.
No.
Exactly. So we're not blindly long into this fair value gap. A lot of new ICT traders are like, oh, this fair value gap must be retracey, right? What we're doing is if I see a daily fair value gap, okay, I will go to the smaller time frame. So now I'm going to the smaller time frame, and I am looking for what? A market structure shift, anything to get us up to here. Okay, so now I'm waiting for structure to tell me we're getting up here. Okay, you can see right here. I'm not sure how, like, see, I can't really show this chart because the volume is trash. Let me see if I can go to ES1 real quick. I think this is continuous, so I'll be able to tell ES1. Well, this loads. So you can kind of see, now we're waiting for structure to tell us, okay, we're going up to this daily fair value. Even though this volume is trash, okay, do you guys see? Here's the market structure shift, okay, so we keep creating lower highs, lower high right here, lower high right here, and then this huge displacement. We go back above this. Okay, so what does this tell me? Well, I know if we have a daily fair value gap above in this certain situation, and I see market structure shift is supporting us to go back up here, okay, I'll long a fair value gap here, which I would not long this because it's not in discount, okay. I'll probably take an entry here, okay, but you can see, like right here, we never get it. But at least in this situation, we're not blindly long. We're waiting for structure to tell us, okay, we're going up to this fair value gap, right? So right here, here's a market structure shift. It's now saying we want to go back up to this daily fair value gap, okay? And you can see, there it is. This is very, very bad volume. But eventually, what do you notice? Now that you broke structure, okay, it is telling us we want to go up to that daily fair value gap, okay? And we end up hitting it, and again, we rejected it. So if we go back to the daily, okay, so now kind of this is where we get in the daily fair value gap. And not only can you use these daily fair value gaps or whatever as a draw on liquidity, you can also use them to say this, okay? When we were...
Oh my... you not understand what I do.
Okay, when we were back in this candle, right? We never saw the green candle that I just showed you. So when we were in this candle, we were waiting for long to go up to here. So we're looking for longs only. If you want to short, if you think we're gonna hit this short to this low, it's just very, very risky. You have to understand when we get really close to a low, I would just not even touch short. There is times that I will, but usually I will not. Okay, but with a daily fair value gap above, what you're ideally looking for is something like this, right? And this means one of two things. This means, first of all, you should be looking for longs up here, and you should not be holding longs any time past this fair value gap. But you have to keep in mind there is volume balances up here, so you can't expect price to go a little past the fair value gap, especially if there's volume balances above. Ideally, with a 3 PD array rule, so basically this volume balance, and this is 3 PD arrays. The 3 PD array rule, you do not want the third one broken, so ideally you want to stay below these, or else your bias is probably wrong. But you know that if we have these up here, you can definitely squeeze some longs out before getting another short setup. And the nice thing about this is you can have a long bias, and then once we hit this fair value gap, you can kind of have a short bias, okay? And if you have a short bias from a daily fair value gap, you're not always going to get a short, okay? I pointed out, if we go to the hourly, okay, this you can see this profit target I'm now hitting. Okay, now you can see we've equal lows, but again, the profit target hit. Good trade. So if you go to the 1 hour, okay, last week I pointed out this fair value gap, and I said, even though my bias is bullish and I want this high, if we get a short setup from this fair value gap, I will take it. And we end up getting a small short from this fair value gap. It never hit sell side right out here, but it gave us a nice move in like the 1 minute time frame. Okay, so it's kind of the same thing with when we're looking at this. If we get a short from this daily fair value gap, great. But if we don't get a short, it's just whatever, you know. And a lot of ICT traders on Twitter, they're like, oh, we must reject this fair value gap, or we must go through it. Okay. If I think we're going to go through a fair value gap, like if I thought this was going to happen, of course I'd still short if we got a short step in the fair value gap, because, again, if you see a textbook short and we're in a higher time free PD array, then those models work almost every time, you know? So that would be something I think is definitely worth taking. And again, like we're kind of in the situation right now to where on Friday, I kind of pointed out this fair value gap, and my bias, even though I wanted lower than this internal low, okay, even though I wanted to go down here at some point, okay, I literally said to everyone, I'm like, okay, this looks like a textbook long anyways, so like if we get a long setup out of this, I will long it. And we actually got a nice long setup tonight, which I posted in trading chat a little bit ago. Okay, so you got to realize, even if your bias is kind of off, and you do see, okay, if my bias was switched, would this be a textbook long? You got to realize, like, if your bias is wrong, then we should get a nice long out of here. And if you get the confirmation set up, it's definitely worth the take. So that's one thing. Okay, so now on the daily, again, if I could just go to the 15-minute. So, again, we saw structure support, and we were going up to this fair value gap, right? I'm going to try to see if ES1 loads. I can just use this chart, I guess. So if I go to ES1 here, okay, and I go to the daily. Okay, so the fair value gap in here is not labeled, which is kind of interesting. So if you are, I would suggest using ESM 2023, okay, because the fair value gap in here is not here for some reason. Just kind of odd. But again, if we go to ES and go back to kind of the time that I was looking at up here, I'm just gonna replay mode real quick. Okay, if we go to the 5-minute, remember, we're looking for price to support us going back into this daily into this. Okay, if we don't see anything that we like, then we just don't take anything. So like here, what do you look for price to go back up? Whenever you look for price to go back up, you always look for liquidity sweeps down. So we get a sweep here, you get the point, okay? And then we get another sweep here. Again, if you don't get along, you just want to take anything. So you can tell, even after we got the sweep here, let me just go back to the daily fair value gap, okay? Here's the daily fair value gap. And you can see, okay, what do you notice? After the sweep here, you can see we do get a long setup, okay? And you can see it's right here. We sweep, okay? I bet there's a market structure set on a smaller time frame. Here's your long entry. You can see we end up hitting the daily fair value gap, but again, you as a trader, if you're going for a 2-hour trade or 3-hour trade, are you really holding much above this high? I mean, yes, you can hold runners, but this is still a long setup, and you still take it, okay? But knowing that you still not hit the daily fair value gap, you kind of know in the back of your head, okay, this still could be a draw on liquidity. What some traders do is they won't long to this daily fair value gap, but they'll wait for a short out of it. I feel like people like that definitely miss a lot of opportunity. If you see an unbalanced fair value gap, I feel like if you are waiting for a short from like a bearish fair value gap, you can catch a long up to it as well if you see one. So again, same situation here. Market structure shift, okay, you can kind of, it's hard to tell, but this is the last lower high right here. Okay, we get a high, higher high, lower high. Okay, so this above this will be market structure shift. Here would be your entry. If we don't get it, you just want to do anything. Okay, so you can see, well, I already know we never end up getting it, I don't think. You can see we never ended up getting it, but then what happened? Okay, we went into this daily fair value gap, right? And now ideally you'd be out of all longs. And again, from the daily fair value gap, you know it's a point of interest. Okay, so you know if we get a short setup out of it, I will take it. Okay, even if your bias is to go above the daily fair value gap and hit the volume balances, again, if you saw the most textbook setup in the world, what do you want to take it on this? Okay, and we did seeing a nice short setup. There's a little more advanced. Okay, so basically it was see how we broke this Bissy. Okay, oftentimes when we kind of break this when we break a fair value gap going up the hit buy side and we dump through it, okay, you can often take the retest. Like you can see there's one right here, there's a smaller one right there. Okay, and it kind of lines up with this low. So when we break it, so you can see how these wicks go below it, okay? This candle right here, as soon as this 5-minute candle closes under, I would take I would take this and I wouldn't even wait for this, okay? And knowing you're in a fair value gap, a daily fair value gap, you're kind of expecting a bigger move than just a 2 to 1 hour trade. Okay, so your stop can be above this high if you want. These are equal highs, which I really teach saying don't short with equal highs above. So I would say this is a little more of a hindsight trade I probably would not have taken. Okay, but you can still see the idea of this is a daily fair value gap. Okay, look for a short setup after you kind of take longs. Okay, and as long as structure supports it, okay, you can't just short from a daily fair value gap. A lot of people try doing that. You can't just short from a daily fair value gap. As long as structure supports us going back down, then again, feel free to take it. But structure has to be supporting kind of what you think is going to happen. Okay, if you're kind of going against what structure is telling you, do you really think a play is going to work? Probably not. So again, I have all these fair value gaps. So I have this on my chart, okay? And here's something kind of weird. So I see that in this situation, I actually kind of saw we didn't really go much into the daily fair value gap. Okay, if you draw this, okay, CE 50%, we never hit the 50%. And I also saw we sold these volume balances above. And I also saw we swept this low, and we actually held the rest of this fair value gap that was unbalanced. Okay, there's no candle close under this. Okay, again, if I'm looking to short after a fair value gap, I'm looking for a candle close under. There's no candle close under this fair value gap. Okay, so ideally, I'm not fully bearish bias yet. I'm looking for a long setup again, knowing we swept the low, we did not close into this fair value gap, and we have leftover stuff up here. Okay, and again, this is how I kind of determine my bias. Even though if my bias is wrong here, it wouldn't matter because I probably just wouldn't get a long setup, you know. And even if your bias, even if you think like we will hit a daily fair value gap, okay, if there's no structure supporting or telling us that, or if there's no long setup you see, how are we going to take a long setup to get up here? You wouldn't. Okay, it just makes 0 sense. So if we go to the 5 minute, knowing that we are in a higher time frame fair value gap, if we get a long, would you take it? Yes, you would. Okay, so I'm just going to watch, see. This is overnight session, which I probably would not be trading yet. So I'm going to wait till we get back to the morning. Also, another key tip, okay? A lot of people, if we go to the 5 minute chart, one second. A lot of people, if we go to the 5 minute chart, they don't pay attention to what the candle, so they don't pay attention to these daily candles, okay? And here's something I want to point out. When we got this dump this day, look at the time. Here's the time, right? What am I trying to tell you about the time? If we draw a vertical line here. Where's the daily candle close? The daily candle close is right here. I know we're under this fair value in the daily right now, but would you want to short this if the daily candle has a possible chance of wicking back up? Okay, probably not. Again, paying attention to when the candle is going to close is one of the most important things I've learned, and is one of the most important things that I backtested. And if you see there's like 30 minutes into a candle close and we're under a fair value gap, you could totally get wicked out. Okay, so usually if I see something like that, I don't short. And there was a great example of it a couple days ago. If you look at the 4 hour, okay, it was right here. So you see right here in the 1 hour, okay, see how we were really way below this fair value gap? We were like 20 points on this fair value gap, but had the hourly candle close yet? Nope. So when I saw the hourly close wick back down this much and close in the fair value gap, I'm like, this is not fully bearish yet. If we get a bearish setup, I'll take it, but it's not really fully bearish yet. You can kind of see you have to wait for the candle to close in the fair value gaps. And ICT does not talk about this as much, but if you really want to be a little more accurate, wait till the candle close in the fair value gap, and that definitely does help me a lot. So you can see this obvious fair value gap, right? But again, would you risk shorting this fair value gap if you know that the daily candle close could kind of close above? In my opinion, probably not. So let's just see what happens. Okay, so here's the daily candle close. And what I'm seeing right now is, 1 second, someone's mic is on. Okay, so what I see right now is this is all messed up, okay? The daily candle closes at 3956. Let me just make sure this lines up. This is not lined up at all, okay? This is not synced. I don't know what it is, okay? But this zone is not actually the daily. So at this time, we actually closed above, okay? So I'm just going to say this is right here, okay? I'm just going to say the daily fair value gap's right here because it's not synced right now. Okay, but at this time, you can see, like, if this was the daily fair value gap, you can see we never actually closed under. So now we're in a new daily candle. So until the daily candle closes under, I'm not really super bearish. It's just something I kind of watch out for. So ideally right now I'm just waiting for a long setup. And I totally forget what happens here. Okay, I do not backtest this before the stream. I'm simply gonna watch this in live time and see and tell you what I long in live time if we saw it. So let me slow this down so I can catch it. Right now, what I would probably long is, see how we reject this? Okay, I'm not shorting this. We're too low here. if I were to long, I would want to go above this. Okay, so this is an old Sibi, and I would want to use this as an inverse if I were to long. Okay, let me see if the long setup appears. Let's see here. Okay. Here's where I'd probably long. Okay, somewhere in the zone. I don't know what happens here. I'm just gonna take a gander and say this would be the setup. And I'll probably target, so this would be a 2.5R. This was at 3 a.m., okay? And I don't trade at 3 a.m. Let's see what happens here. Okay, so it doesn't hit or stop. Okay, so you can kind of tell it's a sloppy. Okay, let's see if it hits. I have no idea what happens here, guys, just so you know. I would outlaw this in live time, though, if I saw it. Wow, okay, so that worked beautifully. Again, this was from a while ago. I seriously do not remember this. So it looks like this trade would have worked out. Again, you just saw me. This is live time. I promise. I had no idea that was gonna happen. I low-key just thought that was gonna fail. Okay, but it didn't. So again, you saw what I told you for me looking for long setup. I said I want to break above this old Sibi. Okay, what does that tell me? This is the market structure shift. If we break this old fair value gap, and you can kind of see this old high we break, okay? And see how we break this with a ton of displacement. So we know that this is the daily candle. The daily candle previously, but before this day, we know the daily candle did not close on this fair value gap. So again, we shouldn't fully be bearish bias. Okay, I get like you could have taken the short, but it's just a lot more risky. So you can see this plan ended up working, right? And it was a little sloppy. It did go a little through the Sibi. But again, it never hit the stop loss. You can see the stop loss would be under this low. Okay, it hits your 2-1R trade. Right here, if you were not already in the trade, I probably would have tried another long here. Okay, this just looks like a textbook fair value gap. And for this trade, my stop would probably be under the order block. Okay, see this red candle before this up move. Okay, my stop would probably be under the order block. And I probably would be targeting this high. Okay, that's if I re-entered, and this is another 2.5R. Let's see if this hits. Wait, and I probably, this would be another trade you could take. And my stop would probably be under this low. The thing with this trade is, again, I don't know if this is gonna work. The thing with this trade is I probably, me personally, if I did not catch this, I would not take this, but I'd probably take this. So I'm going to still see if the trade works out, but I would not be in this one. I would be in this one. Okay, this is the trade I would take, okay? And you got to remind yourself, okay, if you're already in this trade, why would you, if you were not in this trade and you saw this work out and you're like, oh, I wish I caught that. Okay, these guys in these trades, their stop's probably going to be break even or whatever. Okay, so I don't really care what happens. So when you're chasing up here, your risk to reward is just kind of skewed, and it's not a good time to chase. Okay, and I'm gonna actually change my mind. I would not take this trade. Can anyone tell me why? I don't think this is gonna work. I don't know what happens here. I know we do go up at some point. I just have no idea when. Can anyone tell me why I wouldn't long this though? Feel free to unmute your mic.
You just took buy side.
Yes, exactly. Okay, so this is kind of sneaky. Okay, if we look over to the left, we just took a major high. And I get, we are going to hit this target at some point. But why would you, if you were not in any of these positions, if you're not in this long position and you were not in this long position, okay, why would you re-long after we hit some sort of buy side? Okay, I get there's buy side up here, but you can see there's not really an acceleration through this, so you probably wouldn't want to long this. So I would actually think this would fail. Okay, let me see what happens. Yep, so this failed miserably, okay? And you can kind of see it. I was thinking about taking this long, but I kind of took it off the last second because I totally never realized we just hit this. Okay, so I would not have taken that. But I'd still probably be in this trade. Okay, and here, what's gonna happen? Okay, if I was in this trade, if you don't know risk management, up to this is 1R. Okay, I always have profits at 1R no matter what. Okay, up to profits 1R. You don't have to do that. Some people wait for the full price target to hit, but you can see we did hit 1R. If you were up 1R, would you put your stop to break even? Probably. If you were using real money and you were up 1R, would you put your stop break even? I'm guessing yes. So let's just say you definitely would have gone stopped here. I would have gone stopped here. Some of you maybe not have. Okay, let's just see if this trade ends up working out still. I would have gotten stopped here. I'm not going to lie. I'm not going to try to say, oh, I would have gotten stopped there, okay? Let's see what happens. If ICT works, okay, this should not hit the stop loss. I don't know what happens here, but I don't think this will hit the stop loss. Again, would I long it? No, but it should not hit the stop loss in my opinion, okay? I really like this order block. I don't know what happens here. Let's see what happens. See if it hits. Yeah, okay. So it did hit the stop loss. Again, it doesn't really matter because I told you anyways, I would have been out at break even. Okay, ideally you want to hit the stop loss. To be honest, like you can see we just retrace back into here. And we do have some low resistance liquidity right here. But again, if you have low resistance liquidity under kind of like this down short, I probably just wouldn't short yet. Especially with this leftover high up here. I'd probably just look for another long setup here. Okay, and like in this situation, okay, I don't know what happens. I know we do go up at some point, but I don't know when. Okay, I'm just making that clear. This is not hindsight. This is live time. I'm just watching this as I would. So from this situation here, I'll be watching for a long setup. I would prefer us to sleep this low, but I'm not. Am I going to take a short setup down to this low? No, absolutely not. We're too low for that. Okay, I'm not going to take a short setup. I'm just going to watch for a long. Ideally, for a long setup right now, here's what I want to see. If we got this out long, okay, this old fair value gap, if we went above it and then retrace back into it, I'll long that. If we don't get it, it's whatever. Okay. Okay, so I'll probably. Jeez. Okay, so here it is. So see this candle close above this old fair value gap. Okay, that would be my long. And I'd probably buy as soon as we retrace back in the fair value gap. Okay. Sorry, my throat really hurts for some reason. I'm not sure why. So I'm not sure what happens here. This would be my long position. My stop would be on this low. Okay, and I will say something. I will say my stop would actually not be on this low. My stop would be a 5-minute candle close under this fair value gap. Okay, that would be my true stop. Okay, but I'm just going to say we should not hit this low now that we close above this. Okay, so this would probably be my long. Let's see what happens. Okay, I may have gotten south to break even there. Alright, and you can see we hit the price target. Okay, so another beautiful trade again. This is all live time. I'm glad these are not failing because that would look embarrassing on my part. So in this situation, again, what did I say? To get a long setup, I want a strong displacement above this old fair value gap, and then I want a long inside it. Okay, you can see kind of, even though we didn't hit this low, this is such a major fair value gap to where if we trade with a lot of displacement above it, there's no way these guys are going to re-short because they're saying, okay, market trading above our short. This is obviously an institutional candle. Okay, no retail traders are making this. So when we trade back above this, that means there should be a severe shift, okay? and I'm not just saying this, I'm saying this because of all my experience and what I've seen based off these candles, okay? Usually when we trade back above these candles that close with displacement, usually we do not go back below them. That's just from my experience, okay? And we're low enough to where it makes sense to go back up. Okay, so there's a long setup. Would it make sense to long this fair value gap? Absolutely not, because, again, we just hit buy side liquidity, so I would not long it. Again, if it works, I don't care. Okay, if this works, I really, really don't care. Okay, so you can see it doesn't end up working anyways. So just prove my point of why I would not long it. So clearly that is like that, okay? And I just want to say another thing, okay? When I'm longing, okay, I am looking for sort of a kind of confirmation setup. And that was the other thing I want to talk about today. A confirmation setup to me is... One second, my throat. Jesus. When I pointed out this setup earlier, okay, when I said long and then sold for value gap, stop on the lows and then go up here, it depends on the day, but usually I won't just blindly long in this fair value gap when you trace to it. I like to wait for like a kind of a second setup. So what I mean by that is I like to wait for a second setup. So out of the higher time frame POI, I'm looking for us to bounce off of, which in this case would be this. I'm looking, okay, I see we kind of go under it, but I wouldn't be in the trade yet. I see we reclaim back over it and see how much displacement we reclaim back over this with. This to me is like, oh, I know I never longed this, but this is so much displacement. Now if we get a retracement, I'll long. Okay, and it kind of makes your stop a little tighter. In this situation, it's kind of, it doesn't really prove my point because we go, your stop would still be kind of big. Okay, but if I go to like another example real quick. Let me see if I get a confirmation set up here. Okay, right here. Perfect. So we know on the higher time frame, this is the 5-minute fair value gap. So our long setup would be something like this. Here's your entry. Here's your stop down at these lows. Here's your pre-profit. See how bad risk reward this is? What I do is I wait for like a 1-minute long setup out of this 5-minute fair value gap. So look. See it? See how we make an obvious low, energetic displacement back up, tiny fair value gap here. I'm like, okay, this is a tiny fair value gap. Now I know we bounce out from 5-minute fair value gap, so now my risk can only be down to this low, and then my take profit can be higher. See how this lowers your risk by a ton? Okay, it would probably be the start. See how this lowers your risk by a ton rather than having the giant stop loss under the fair value gap? Okay, so this is what I mean by a confirmation setup. So we're in a higher time frame kind of zone, and then we get a lower time frame kind of setup. So another fair value gap, okay? And now you can make your stop tighter. Your stop should not be another low. So there's that. Okay. We hit buy side here. So again, you wouldn't long this fair value gap. Why? Because we hit buy side already. Okay, so it makes no sense. Thank you. Okay. One second, I'm just drinking water. Alright, so again, we hit buy side here. You wouldn't long this. Obviously, that's like textbook. I actually choose 101. Okay. So that's what I mean by the confirmation setup. Let me see if I can find one more real quick. I'm going to try to find this in live time to make this as real as possible, because I don't really know what happens here. On the lower time frame, okay, right now, to me this kind of looks like a buy curve. And I like this high right here because it's kind of obvious and it's just like you kind of get in that curve. So ideally I would still probably be looking for another long setup here if I were to kind of be trading this. Let's see if we get one. Oh. Okay, so we never got a long setup up here. I was trying to see if we got one. So there's no long setup up here. I just wouldn't have taken anything in this situation, but we did hit this high. I actually do think I remember this, but I forgot when we hit this high. So I do remember this. I totally forgot what happened though after this. I don't know if he went down first and then we went back up, but again, it doesn't matter because I would still take a confirmation setup, so it's not like I'm gonna lose that much anyways. So now we hit this high again. Now I'm looking for short setups. Now look. Do you guys see any short setup here? Okay, anything suggests going short here? Absolutely not. Okay, when we trade above this with this displacement, is there any market structure shift here? We know we hit buy side. Even though we hit buy side, there's no short setup here, so I just want to take anything. This right here is my imbalance. This is a low risk sell. Okay. I don't know if this ends up working or not. The other thing I want to talk about was low risk sells versus low probability sells. Okay, so what that means is this is low risk because the stop's up here. This is like a nice small entry, but it's also low probability because is there a high time frame market structure shift? No, there's not. So this would, and the order flow is also still bullish here. Okay, but this also be decent play probably because of these equal lows. So I'm gonna go ahead. I don't know if this ends up working. I'm gonna go ahead and say I'm gonna take a short here. Okay, if this is live time, I would definitely try a short here maybe. In this situation, I probably would go half size. I'm not gonna lie. I'll probably go half size. The only reason I'll try this is because these equal lows. So let's see if this works. I'd go half size in this, I would say. Okay. Right here, I would get out. Okay, and I just said that when I stopped, we never even saw the green candle. I'm not saying I would get out because of this green candle. I would get out right here in this candle. Can any of you tell me why I would get out of the short right here in this candle instead of waiting for my stop private?
Was it closed above it?
Yeah, closed above this volume balance, which I did not like. And oftentimes, you can use these volume imbalances as... Oftentimes, you can use these volume imbalances...
With AT&T 5G?
So a lot of times you can use these volume balances as inversions. Okay, so now I would actually I would long this setup. That would have been my entry. This pullback would have been my entry. This would have been my stop probably. This would be my take profit up here. I probably would have done that. And wait a minute, I actually took this. I think I'm pretty sure I actually took this long. I'm not even kidding. I do remember this a little bit. It's a little foggy. But I think I actually did long this. This would be my target. So as soon as I see candle close above this old volume balance, and also you can kind of tell this displacement's kind of major.
Right?
What?
Can you come get your laundry, please?
In a little bit.
What?
I'm doing a class in a little bit.
What class you doing, hon?
Nothing. Just I'll do it in a little bit.
So you're on with someone right now?
Yes.
How's your homework coming?
I don't have any. I already finished all of it.
Okay, can you turn off the other side of the gym, please?
Yes.
Thank you.
All right. All right. So, even though we did these equal lows, I would have still probably sold. I probably would have gotten out for a minimal loss here, and I probably would have long this setup, and I did long this setup. I'm pretty sure. I'm not sure if I think I held it to the high. I'm not really sure. I kind of forgot. So, again, what do you notice? This is going back to the confirmation setup. We know on the 15-minute, okay, or on the 5-minute chart, ready? This is like a whole long zone, okay? But how do we know exactly where to long here? Okay, you don't, which is why you don't enter these. I don't blindly just enter anywhere in these. I just wait for the confirmation setup, okay? So, to me, honestly, This is the confirmation setup. I probably would not have bought the retracement of this. The reason I'm saying that is because this just looks like this would have been a volume bounce, and then we would hit sell side equal lows. Okay, again, I don't really long with 3 equal lows or more. Okay, so when I see this for a backup, I'm not long here. So again, this close kind of confirms, okay, I can use this inversion now. I'll probably long this. This would be my confirmation setup. So I'm going to kind of keep these equal lows here just in case. I like to keep all the equal lows on my chart because if we do get a short setup, I would like to take it down to those equal lows, probably. Okay. Right here. This is kind of hard to catch. Actually, never mind. I'm not going to point this out because, nah, never mind. I think we're probably going to go for these equal lows. I'll short this. Probably. Where's my stop loss, by the way? My stop loss would probably be this high. See, this is not great risk reward. There's a tiny volume bounce up here. But with these equal lows, I kind of like this short. I've totally forget what happens here. Kind of bad risk reward. I probably wouldn't go too heavy in this, but let's see what happens. Alright, this is kind of looking scary. Not gonna lie. There's equal highs up here. I probably may have gotten out for break even here. I'm not gonna lie. Because this is demo. If I demo this, I would stay until this high. If I traded this real money or funded, I'd probably be out of break even here. Okay. I do not like when price compresses or goes lethargic inside fair value gaps, even though they do end up working sometimes. So I probably would have gotten stopped, not stopped. I would have just gotten out for no loss here, and if this ends up working, I probably wouldn't be mad. Okay, so I'm just gonna say I'm getting out here for, on my real account. Theoretically, I'm getting out here. Okay. I do not like how price is compressing inside the fair value gap. Ideally, you want a rejection here and then just go down right away. Okay, so because we don't get that, I'm probably getting out here break even. And the thing with this is also low risk but low probability. And the reason why it's low probability is because there's no technical market structure shift here. The only thing that I see is these equal lows, which is liquidity, which liquidity trumps any market structure shift or whatever. Okay, there doesn't have to be market structure shift for us to go hit liquidity. Okay, we'll hit it at some point. So this is probably why. So this is low risk but also low probability. So I'm just gonna say I'm getting out of my position for no loss or no gain here. Let's just see what happens. Wow. Okay, so I made the right call. Looks like. So I made the right call there. I do not like these equal highs. Usually when I see that inside a fair value gap, especially when we're compressing, 9 times out of 10, if we're compressing inside a fair value gap and we make equal highs inside it, 9 times out of 10 we go to hit them. So I would have just bought back there and just never taken a loss. Okay, I still have these equal lows. I still think we're probably going to come down and hit them. So again, I'm just waiting for a short setup here again. Okay, so see, I'll probably short this now. Okay, there's not really any market structure shift, but do you see why I would short this? And another thing I am watching is this. This is also a breaker block. Okay, right here, if we trade below this breaker and then come back in here, I'll actually short this and not this. Let's see what happens. Okay, right here, I'm shorting. Actually, wait. I want to see. I'm gonna see how this candle closes first. I want a candle close below this breaker. Okay, I'm not actually shorting this yet. 1 second. Okay, now I'm shorting. Right here, I'm shorting. this is when I'm actually shorting, okay? I like how we go below this breaker. My stop loss would probably be... Okay, stop. The best stop loss would be this high. Best take profit would be this low. This is only 1 point R. This is only 1 R. So I actually would not take this trade, okay, because it only is 1 R. If you care about 1 R, if I was a 1 R trader, yes, I would take this trade. From an ICT standpoint, theoretically, this trade should work. Okay, so let's just see what happens. Totally forget what happens here. Okay, so we retracing this for value gap. Let's see. It looks like we're gonna go over it. Okay, right here, I'd long this. I'd get out here and long this. Okay, see this huge displacement over this old fair value gap? I'd reverse my position here and take this long, and then I'd resell at this high. Okay, I totally do that. Yep, and see what happens. Okay, I see again. I don't know what's gonna happen here. This is just me watching this in live time. See how we trade above this old fair value gap? I'd reverse my position here with almost 100% confidence we're gonna re-hit this high. I'm still gonna keep these equal lows. You can kind of see, even with it, you can kind of see why, like, when we go under these lows, okay, we never really go under with a lot of displacement. So this was kind of a really low probability short, but it's also low risk because ideally your stop would be above the breaker. Okay, ICT made a post the other day or today saying stop loss is a close or going back above the breaker. So my stop loss that I showed you probably would have been too loose, but you can kind of see on this when we close above this again. This should work from an ICT's perspective. We have liquidity down here, very value gap here. We've no solid market structure shit, but this should work. So the moment you see a green candle bursting above it, I would totally want to pull back into it because that just tells me these institutional shorts are getting stopped out and they're going to need the cover, which will make us go back up here. Okay, so I'm still watching short. I'm just going to get rid of this and I can't get rid of this, whatever. Okay, right here.
Yeah, you can.
Wait, how do I get rid of all this stuff?
Go to the bottom left next to the play button. Left, right there.
Yeah.
And then just like click the other one.
So right here, I like how we create a volume balance. I see we take out highs again. Okay, so I see we keep taking out highs here. So I'm still kind of monitoring these equal highs. I know on a higher time frame we are very high still. And another thing I kind of see here is if we draw a fib from here to here, notice how we never actually hit discount in this leg. So to me, this is still unbalanced. So I'll probably imagine we come down and hit discount at some point to rebalance that. I do see this breaker block as well. Alright, I'd probably take a short here again. Maybe. Okay, my target would be these equal lows. There's my entry. Let's see what happens. Okay, I do not really like this. I'm also watching the time, by the way, guys. This is about 3:24 during the day. My real account here, I probably would be out here. And the reason I say this is because I see we still held this SIBI. Okay, so again, when we trade back above this and hold these SIBIs, I do not like to get in. A confirmation for me would be closing below the SIBI to go short, but I'm just kind of showing you kind of my thought process, saying like, okay, think eventually we're going to hit these equal lows, so I'm going to keep shorting. And as long as the risk reward is like a 2 or above when I'm shorting here, okay, it's totally fine to take a loss here. A lot of people don't understand that. Okay, so we hit the high again. So I'm just going to keep watching here and see if I get another short. This is better for us because if we do get a short, the risk reward is just going higher and higher. And also, no, I'm not long way up here. It's just stupid. Okay, you gotta kind of get another low risk short again. Get another low risk short, and I missed this. I was too fast. See how we? I'm just gonna go back. See how we close below this fair value gap. This is the fair value gap I'm using. A lot of people, they don't know what inverse fair value gaps they use. Okay, I'm not using this one, and the reason for this one is because we see how we perfectly bounce off this one, and then we dump below it. So to me, this is gonna hold more weight, even though we have this one right here. So because we closed below this one that we did balance already. Okay, so when we retrace in here, this means this is balanced. Now this is balanced. This is the inverse fair value I'm using. So this retrace back on this candle. I'm taking this sell right here, okay, on that candle. And to me, again, the risk reward is gonna be even higher now. This is another low probability buy, not high probability. Again, why? Because there's technically no true market structure shift here, but we know these equal lows below. So I don't know. I think they'd be hit at some point. Okay, here, right here, is probably where I have my stop at break even. Okay, this is about up 5 points now. I probably might stop at break even here. But you can kind of see this is still a really good entry, and you could take the 5. I could take the 5 handles here if I wanted to, but if you truly care about RR and I see, so I have this previous loss right here, right? Okay, so we traded below the breaker. I took this loss. This is a 2R trade. I want another 2R trade or more to outweigh this loss. Okay, so I'm probably not going to sell here. I'll just have my stop and break even. And my stop break even is up here. It's not where this actually is right here. Okay, this is not my actual stop. My stop's up here. So if we go back up here, this is my stop. Just speed this up real quick. This is, you gotta realize this is now 4:24, which is not a good time to trade. But let's say I was still in a trade. Speed this up real quick. It's still working. My stop would still be a break even here. Again, I don't know what happens here. This is very bad time to trade. So you can still see it's working. At this point, okay, I am up 2.3R, which does make me profitable. If I took a loss here, a 2R trade loss here, and I took a 2R win here, okay, so this would be minus 1R. My loss right here would be minus 1R. I would be plus 2R now. So from this trade, I'm now profitable. So now what I would do is, now I'm moving my stop. Again, this is more of risk management, not ICT. Now I'd be moving my stop back to 1R. So what's 1R here? 1R is right here. But now my stop loss would be this high. And the reason I say that is because if I get stopped out here and profit for 1R, what does that mean? Well, if I take a 1R loss here, that just means I'm back at break even, and this loss totally does not matter anymore. Okay, so my stop's now above there probably. If we hit it, it's just whatever. Again, I don't know what happens here. Alright, let me speed this up a little bit. Alright, come on. Okay, so we end up hitting this high. I would have gone stopped out for 1R, which means what? My loss here would just have been, I would now be at break even here. And I missed it, but I would have won this. And the reason why I little on this is, again, it's just the old inverse fair value gap idea. Okay. When we create equal highs like this, and we do not hit them, and we have giant displacement here, okay, I'm not gonna blindly long this whole fair value gap, but I know this is a high probability long if we get like confirmation set up. Why? Because again, goes back to the inverse fair value gap. See how we close above this old civvy with a lot of displacement? So I'll look for a long here. Let's see if it gives us a confirmation. So it does not give us any long setup actually here. So it actually not long this, and I know it works, but there's no confirmation setup. Okay, I'm just not gonna take it. So that's a little bit about how I use inversion fair value gaps. You can see this worked out pretty good. I'm not sure if we ever do hit these equal lows. Again, I don't remember what happens here. Let me just go to the 15 minutes, speed this up a little bit. I'm curious. Okay, so we never actually go hit those equal lows. But again, the market still kind of draws towards them and still allows us to kind of take a short setup down to them. And again, equal lows in the 5 minute 15 will always hold a lot more weight. So 1 minute ones, I'm very careful. I don't like if there's only 2 equal lows in the 1 minute. Usually I kind of just stay out. And people are talking. I have not been reading the voice chat, guys, or the chat. I'm sorry. A volume imbalance is just kind of when we get this gap in between these candles. See how this candle closes and this candle opens here. Okay, see how this closes and the body does not overlap in the open. This is a volume imbalance. Okay, when the open does not overlap the close. Okay, so it's been about an hour. So I'm probably gonna just get off here. Okay, so what I went through in this is, again, I went over the confirmation setups like I talked about and kind of how I use inverse fair value gaps and how to determine the daily bias. And daily bias is, again, I just draw those daily fair value gaps, okay, and I always use them as a draw on liquidity and then a possible reversal off of. Okay, and again, if you don't get the setup in the lower time frame when we're in them, you just don't take a setup. So that's kind of how I use daily bias. Again, I think I marked here. I marked fair value gaps, volume imbalances, order blocks, breaker blocks. Another thing I do want to point out is if you look at NQ, we actually did end up hitting these volume imbalances on NQ, remember? So we got 2 on NQ. We actually end up hitting them and rejecting. So that when I saw this on NQ, I was like, okay, yes, probably not gonna hit them. But this is kind of more advanced. I wouldn't expect you new guys to kind of know that, but you can kind of see on NQ what happened. It happened on NQ. So what I thought was gonna happen in ES happened on NQ. Does anyone have any questions? Would this be a failed SIB or inverse fair? Yes, that would. I would love that. I would use that. And also, that would be a breaker above if we broke through that. Does anyone have any more questions before I get off? I'll probably explain a little better, explain a little more if my voice in my throat didn't hurt right now. I'm not sure why it hurts so much, but... My bias kind of right now is I would want to see some sort of sort down to this new week opening gap. This is pretty textbook. This is the volume balance right here. Alright, I'm going to give you guys like a minute to ask me any questions. If you missed something like when you're taking notes or Just forgot what I said. Just ask. Should hit these. See if these equal highs. And this is actually live example. See how he kind of, again, it goes back to the SIB example. There's an old volume imbalance here. There's an old SIB, which is in that volume balance, so you could just mark this whole zone. We trade above it, okay? But is there an entry here? No, not really. There's not really a good entry here, so I just probably want to take this. There actually is right here. See how this fair value gap overlaps with this old SIB? And now we've equal highs. But again, would you really want to chase this? Would this be good enough for RR? Probably not. But again, sometimes it's going to happen. You're just not going to get an entry. And it is what it is. You have to learn not to FOMO into that. Alright, well, I'm going to get off here. If no one has any more questions, again, just DM me if you do. For my premium guys, I'll be in live voice chat tomorrow, assuming my voice is fine and my throat still doesn't hurt. I'm not sure why it does tonight. Usually I kind of explain a little more. I go a little, but it's really hard to me. I'm trying to talk through my throat hurting right now. So, hope you guys enjoyed. I'll see you guys later. Have a good rest of your night. And yeah, good luck tomorrow, everyone. Peace.